Look at this. This week, the latest AI investor sentiment number. So this basically, are investors bullish, neutral, or bearish on the market for the next 6 months? Like, it's a great kind of tell on how people are feeling out there as far as investors go. Look at this. We just had a major flip. Now, as of this latest week, 45% of investors are bullish on the market, folks, for the next 6 months. That's a huge flip. And now we've gone to a point where we're significantly over the historical average for bullishness. The historical average for bullishness is 37.5%, and we're at 45%. That's significant. Significant. Additionally, bearishness is still actually higher than where your historical average is, but neutral is like way down. So basically we have a market now at this point in time where people are either bullish or they're bearish, but not a lot of people kind of in that middle ground of that neutral area, right? Which means essentially we could be in a situation where Wall Street's preparing to go all in over this next month or two. And what I'm seeing here is a situation where if earnings come out are good and the guidance is good, I think Wall Street's ready to go all in this market now at this point in time. And you'll see that bearishness go way under the historical average, and you'll see that bullishness push to like 50% plus, especially if you get good guidance from all the companies that matter. What are the companies that matter? All those Mag 7 type of companies, and the companies right underneath those companies, like the AMDs and the others, right? Get ready. They're getting ready to go all in this market. And remember, they were not investing into this market in April. They started to nibble a little bit in May. They started to nibble more in June. And now they're preparing to go all in this market. And look at what I just showed you guys, right? We're going to react to a bunch of videos. But look at these videos. Obviously, Tom Lee's always bullish, right? But look at Dan Ives. We're just at the beginning age of golden age of tech. Look at this one. No signs of bear market on the horizon, Edward Jones, right? The market will continue to grind higher over the near term, Morgan Stanley. That shows you also the sentiment, right? And I'm looking forward to reacting to those videos in this one here today. But that shows you the sentiment of how people are really feeling in this market, how Wall Streeters are feeling in this market, right? They're starting to get really, really bullish at this point in time, right? Which definitely bodes well for the stock market in the short term. Now, with that being said here, right, you got to understand, to really make a lot of money in the stock market, you've got to be buying stocks when the sentiment's bad. I'm showing you the public account right now, $3.6 million plus portfolio of mine. If I think about every single one of these stocks, I basically added every single one of these stocks when the sentiment was really bad. Meta. When did I add a lot of my Meta shares? A lot of those Meta shares came in 2022. The sentiment was horrible. Complete dumpster fire. AMD. I had a lot of AMD shares over the past, 6 to 9 months. AMD sentiment was horrible until very, very recently. All of a sudden, the last, I would say, 2 months, AMD sentiment has switched massively, and people are starting to realize what I've been talking about, right? But before that, AMD sentiment was bad. Amazon was kind of a late 2022, early 2023 buy when sentiment was very negative. PayPal was like, that stock had crashed from like 300 down to like 50 something dollars, right? My cost base on that one, 62.48. Sentiment was so washed out. Palantir, sentiment was awful. Palantir, oh my gosh, my cost base is 737. What is it, an airplane? Is it a Boeing? It might as well be, right? The only difference is it didn't crash. Palantir, unbelievable, right? How bad the sentiment was. Cheesecake had horrible sentiment. Nike, could you talk about worse sentiment than when I've been buying Nike recently? Celsius, awful sentiment when I was buying it. EL, the more, what I just figured out about myself and my investing process? My key to the success. I just figured it out. It just hit me while I'm recording this. I buy companies that actually have great long-term futures when the sentiment's horrible. like literally, that's what I do. And if you look at that every single time, it's unbelievable, really. And even I'm buying a lot of Adobe shares right now. Adobe sentiment's horrible right now. Stock's trading at a joke forward P. People are like all scared about this and that. Google, same exact situation. I've been buying Google here recently. Sentiment's horrible in regards to Google, worried about OpenAI and all these other, services and whatnot. That's the trick. You gotta buy stocks when the sentiment's horrible. And then you just make lots of freaking money. Unbelievable, really, right? But you gotta get the stocks right. Like, obviously, there's a lot of other stocks that sentiment horrible, and, they don't come around in those sorts of things. But, man, when you get this game right, woo-wee, it could be a lot of fun. A lot of fun. And just wait to AMD. If AMD comes out with a banger guidance, like I think they're going to come out with, you're going to see AMD go 175 to 200 quick. So now, additionally with the sentiment, this shows you how much things have really switched now at this point in time. You know, as far as people being bullish on the market, we got all the way down to only 19% of investors were bullish on the market the next 6 months in May, right? What a horrible perspective, because they should have been very bullish at that particular time. And you look at kind of these look at April 2nd, 21.8% bullish. That's it. Look at April 23rd, 21.9%. Look at April 30th week, 20.9% bullish. And look at how big these bearish numbers were, 59%, 61%. If you're wondering why the stock market just keeps rallying and rallying, it's because all the big money sold out at the end of February, into March, into April, stayed out, and now they're just, you know, everybody that wanted to sell sold. Like literally everybody that wanted to sell sold during that particular like 60 trading days or so, right? And now we're in a situation where slowly but surely people are buying in and people aren't selling. Like, I'm not interested in selling my AMD shares. Sorry, got to bid up for those. Neither are other people, because they understand AMD's likely on the path to 200 plus. They're like, no, we're not selling AMD. But you got more and more people saying, I want to buy AMD. And when I say people, I'm talking Wall Streeters, big money. They're saying, I need an AMD. I'm hearing more and more talk and excitement. I just was watching Fast Money a couple days ago, and I believe it was Tim Seymour talking about very bullish on AMD. And it's just like you're starting to see the Wall Streeters, the big money start to get, you know, excited about these stocks. And a lot of us are like, I'm not selling. I don't care. AMD can go 150. I'm not selling AMD. AMD can go 200. I'm not selling AMD. I'm holding on to my shares. And a lot of people are like that, right? Think I'm interested in selling Amazon? My 1,111 shares of Amazon? No, thank you. You can bid up for those, right? And so they got to bid up. Next thing you know, they're paying 224, 227, 230, 240, 250. I think the only one that's been, by the way, Amazon right now, let me be clear about where Amazon stock price would be right now if it wasn't for a certain thing. Right now, Amazon stock would be 275. But Bezos has been putting a lot of selling pressure on the stock. I mean, a lot of selling pressure on the stock. So it's actually kept Amazon stock price much lower, artificially, at least in my opinion, than it would be if it wasn't for Jeff Bezos putting a lot of selling pressure on the stock. Now you might say, well, does Jeff Bezos know something? No, like, he's just trying to diversify funds. He likes to invest in other things. He likes to have elaborate weddings in Italy, man. You know, none of that stuff is cheap. Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy. All right, let's react to this
the
one.
Holiday weekend, the tax bill's done, the tariffs are still looming, earnings about to start, and stocks are at record highs. That's how the table is set. So, Joe, how does the table look?
Okay, so the table in the near term still looks good. Momentum names still holding serve. Axon, Palantir, higher today. Mag 7, I know we're going to talk a lot about Tesla, but how about Amazon, which to me looks like it's...
Palantir, here's the deal with Palantir. You know, I wasn't even going to cover Palantir, but I think since it made such a strong move today, once again, look at the Russell. The Russell Wilson's down 1.5%, and look at Palantir up 3.5%. Look at the Qs, or the NASDAQ, down about 1% here today. Palantir's just rolling. You know, here's the deal with Palantir. If you're wondering, is this one going higher short term? If the company comes out again this quarter, which their earnings will probably hit in the next 3 to 5 weeks for Palantir, they come out, they beat revenue and EPS again, and they have another even stronger guide. Let's call it 40% plus revenue growth expected. Palantir will still see momentum. You'll see that stock go 150 plus. Now, this is the scary part for Palantir. As soon as the stock starts to begin to show decelerating revenue growth rates, it's gonna go down big. When I say big, I'm talking it's gonna go down 25 to 35% in a matter of weeks. I'm not talking months, I'm not talking years, I'm talking in a matter of weeks, it'll go down 25 to 35%. Like, boom, like that. But that's when it begins to actually show decelerating growth rates. And it's going to get harder and harder now this next few quarters for Palantir to keep pushing the bar higher. Like, they're already at a point where they're running like 40% revenue growth rates. It starts to get really difficult to continue to push that, because now you need to be talking about we're pushing to 44% revenue growth, 46%, 48%, 50% revenue growth. It becomes a daunting challenge. And at some point you break that trend and you start posting a little less, and that's when Palantir is going to get hit very, very hard. So right now, Palantir's it's a dangerous stock to be playing either side. For the stock in the short term, if you're thinking about a short-term outcome like puts or calls, very dangerous stock, because you buying puts right now. If they come in and show another acceleration of growth rate, or expect another acceleration of growth rate and come and beat numbers, Bay's likely going higher or pushing a 150, and your puts are going to expire worthless. If you're thinking, oh, I'm going to play on the call side, right? If all of a sudden this revenue growth rates shows deceleration in growth, this baby's getting crushed. Your calls are going to all expire worthless. So it's such a dangerous stock to play either side right now, which is why I don't want to actually play it right now. If they post another double beat, another great guide, talking about another acceleration of growth rates, then maybe come September, October, November, maybe then I could come in and hedge against Palantir and buy some puts. Assuming, that I am confident at that point in time that in 2026 they start to show revenue growth deceleration. But, time's got to tell there. I got to wait till I'm very, very extremely confident that they've reached a peak in regards to the absolute growth rate number.
Breaking out, it looks like it's going to go above 2.25. Meta remains strong. That's the moment. That's where we are right now. However, my expectation for the third quarter is, at best, we're flat to lower. And I think one of the reasons why is going to be about July 15th. What is July 15th? The start of the earnings season. July 15th, we're going to hear about earnings. We've been lowering the estimates for earnings. I think we are going to learn that corporations have absorbed the tariff cost, and that is going to see significant margin compression. The inflation from tariffs, it's not showing up in the inflation report, so it's going to show up somewhere. And I think it's going to show up in margin compression. It'll be okay if you get the revenue growth, but consumer discretionary, consumer staple, I think you're going to see earnings growth year on year that's going to be down. I think the biggest challenge we have in front of us is going to be earnings.
All right. You know what else is July 15th? This is to buttress your point, is June CPI. And we have...
Let me take the flip side of that. There's huge potential upside this earnings season. Listen, last earnings season, everybody went in very scared. You even heard him talking about the risk to this earnings season, right? So everybody's even going into this earnings season very concerned. What's the tariff impact going to be on these corporations? Let's say hypothetically, these corporations come in and do what? They come in with revenue beats, EPS beats, guides that are ahead of where analysts are at, and conference calls that sound more confident than the previous quarter. Do you know where the market's headed? If that happens and that actually plays out this earnings season, you're going to look at a market that between now and September will be considerably higher. Now, let's say CEOs sound just as confused as they were last quarter. Let's say earnings aren't strong, those sorts of things. The guidance is really weak. Then fair play, we're going down to Chinatown if that happens. But my guess is, from all the companies that matter the most to the stock market, revenue is going to be good. Earnings per share is going to be really good. And guidance is probably going to be ahead of where the analyst community at. For the companies that matter the most to the stock market, whether the stock market goes up or down, let's think about the top 20 to 30 biggest market cap companies, which means you're looking at a higher market between now and September, if that plays out, which I think it is. And I think CEOs are going to be more confident That doesn't mean they're going to be like the most confident in these conference calls, but I do believe, let me be very crystal clear, I do believe CEOs in general are going to be more confident in where their business is headed, the whole tariff situation, than they were last quarter. Because last quarter was like max confusion. Remember when those numbers were all coming out last quarter? Last quarter, we were getting all those numbers, kind of around that peak uncertainty period, right? Of people being just ultra level confused about tariffs and where things were headed and the business environment, all those things. I think things are more clear now than they were back then, right? Doesn't mean everything's crystal clear. It's just there's less fog in the air now at this point.
Not seeing the tariffs show up in the inflation numbers yet. I mean, if it's going to show up, it's got to show up then. I'm just accenting your point, Joe.
Okay. The commentary this morning, Pasquarello at Goldman, is still a bull market, yet one that is delivering less convexity and less consistency than before. Core positions that I believe in and would marry as a composite: U.S. technology and U.S. power, steeper global yield curves, a somewhat weaker dollar, and don't fight the primary trend in gold. Morgan Stanley's Mike Wilson, Weiss, a tougher first half, what we just went through, better second half, and better 26. Could be some consolidation, he says, during Q3. They're bullish on a 6 to 12 month horizon. He thinks that earnings tailwinds are going to expand, not contract.
And that could very well be right. Now let's go ahead and take a look here on how the stock market's done so far this year, which I think is important because we looked at the 1 year, right? The 1 year S&P 500 is up 11%, Qs are up 11%, IWM up 8%, which is about what you'd usually expect from the market. But what about so far this year? So year to date, the Qs are up 8%, S&P 500 up 6%, IWM's negative on the year. So if you're looking for a very bullish kind of catalyst for the remainder of the year, I would look toward the Russell coming back strong, assuming we get a continued risk on market, right? That people feel good, people feel like rates are going lower, inflation's not a problem, and growth will pick up in 2026. If that happens, you're going to see that IWM play a big game of catch up over this next 5 months, essentially, all the way into Christmas. You'll see the IWM boop, 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 and don't be surprised if then the turtle wins the race in the end. I wouldn't be like if you asked me right now, would I be shocked if the IWM had a massive comeback and actually beat the Nasdaq and S&P 500 returns by the end of the year? I wouldn't be surprised at all. Am I playing any call options on the IWM right now, Russell small caps? No. But would I be shocked if this turtle came back and won the race by the end of the year? I wouldn't be surprised at all. Just to be honest, just kind of seeing the way things are playing out here, right? But whoa. That remains to be seen. Mike Wilson here, it's weird, man. Freaks me out. Mike Wilson kind of being bullish. I don't know, man, because he was so bearish a couple of years ago, and then the market just kept going up right in his face. And I don't know. Now I'm a little scared that he sounds so bullish now. I'm like, oh.
Yeah, I'm going to disagree with him. So I agree with Joe that up until and Jim makes a great point on CPI, because I don't think you have to see it in July 15th, and I know that's not what you meant, but I think it's likely you start to see it, and not only from a cost input affecting margins with companies, but also from a demand input. So you've seen a lot of pre-tariff buying by consumer, by corporations, pre-supply chain stocking, and that's going to run out at some point. If you go to buy a car, they say, despite tariffs being announced on cars and in place already, they say you can get pre-tariff prices now. So they're trying to drive demand. That's going to run out eventually. The reason why I disagree in the second half is because I do think inflation takes a foothold. I do think that we're going to run out of time on delays, and that all the good news on tariffs, like with the tax bill, whatever he calls the bill, being pulled through into the market, which is the reason for the sell-off today. I would hardly call this a sell-off how we've gone. But I think that all the good news from the Trump administration has already been seen and discounted in the market. And now
all of it?
I believe so. I'm saying in terms of stocks, for example.
Well, I know what you're saying. I mean, what else would you be saying in terms of whatever else?
In terms of, for example, the deduction of capital expenditures up to, I think they've raised it to $4 million, that if it's put into use in the year you buy it, that will show up in some of the companies when they report, not this quarter, but going forward.
Well, Weiss, how can stronger economic growth that they think is going to happen as a result of the bill and deregulation and tariffs not being as bad as once feared, how can that all be in the market already?
because the market's trading at record highs. It's trading above what we viewed as a troubled valuation area a year ago before this, and the fundamentals don't support. We are starting to see a slowing in the economy. If you work through all the, basically what they're saying is, oh, this is going to drive tremendous growth, you can't get away from the fact that prices are higher, that they still don't have tariff deals. And while they don't have tariff deals, at some point, he's going to have to not extend the tariffs, but actually deploy the tariffs, which will affect pricing and demand.
They're making a big bet on classic supply side economics.
That's exactly right.
You flood the zone with the opportunity to spend more, make more, reinvest more, and thus earnings grow more, the economy grows more, and that what looks relatively expensive today to some in terms of the multiple of the market, like Weiss, actually isn't, because you are at the beginning of this more prolonged growth period than not. That's the argument.
You just used the term supply side, and I've got to say, in the last several months, that's the first time I've heard somebody say it, and that's exactly what it is. This is supply side economics. Now, we can debunk it based on history, but here's what I think is going to happen. First off, in the short term, Joe's right. We got the Treasury about to refill its coffers with the debt ceiling lifted. You've got seasonality coming in August and September. I wouldn't be surprised if the third quarter is lousy, but
and that's healthy.
Fine.
So this is hilarious. This is hilarious because I'm watching these three guys, right? And I react to these videos a lot. These three guys, usually it ends up going south at some point in time. But they've been keeping it very peaceful, very cordial, very complimentary up to this point in time. But usually at some point in time, they start fighting and start arguing, but they've kept it actually pretty peaceful so far.
But I think we're going to end up the year higher by meaningful amounts than we are now because of what, Scott, you just mentioned, which is that this is a pro-growth budget bill. Now, Steve, you're right. We got some serious questions about what... No, hang on. We got some serious questions.
The funny thing is, it's just like a ticking time bomb. It's just, I'm just waiting for someone to take one thing the wrong way, and next thing you know, it's a big old fight. It's just hilarious.
Now, because of what, Scott, you just mentioned, which is that this is a pro-growth budget bill. Now, Steve, you're right. We got some serious questions about what... No, hang on. We got some serious questions about what the tariff deals are going to be. And if this extends this question, this uncertainty, past August 1st, we're going to have problems because companies have hesitated on hiring. They've hesitated on CapEx. Even giving the extra CapEx expenditure, that is a huge benefit. But if we don't have the deals in place by August 1st, they're just not going to know what to do. I think they will. I'm just going to finish really quickly. Go ahead. I think they will get these deals in place. They know they need them. And after that, this CapEx expenditure is very pro-growth. Next year, earnings are estimated to grow 14% year over year. I think they will.
Okay. Let me clarify my position. I'm still fully invested. I haven't taken anything off whatsoever. I still think that's the path of least resistance. All I'm saying is that I think we will have a softer earnings period. To Joe's point, earnings estimates typically get cut 3% going into every period.
I mean, they've already come down. Now the bar's lower.
Right. The bar's lower.
Now you don't have to jump so high.
But that's for this quarter. Guidance for next quarter, I think, is going to be somewhat muted because you can't guide. You don't know what tariffs are going to be. You can't take the word of the administration. How many times have we heard that I've got 20 deals this week that are going to sign? So until you see the whites of their eyes, so to speak, you're not going to take that out of the market. So my point is that we're going to see, because of higher prices, and we'll talk about the airlines later. We can see it in other goods as well, and services. Keep in mind, you're taking a lot of the population, the immigrant population, out of the workforce. The deportation numbers aren't as large as we saw under Obama or Biden so far, but they will exceed it. But they're scared, they're hiding. So that's going to be wage inflation. So there are all these knock-on.
That's interesting because that's a point I was kind of talking about. I think it was inside the private group recently.
Effects. Yes, the bill is pro-business, without a doubt. It's pro-growth. And the continuing threats on Powell, if he does fire him, doesn't have the right to, I think that could lead to something positive. But the point is, I think that everything right now is being seen through rose-colored glasses, and I don't believe that's the right stance.
So I disagree with Mr. Shorthill's Capital here a little bit in regards to companies not being, he kind of makes this point about he's worried about guidance of these companies and they're not going to be able to guide because they don't know what's going on with the tariff situation, right? I disagree on that, and here's why. When are all the big dog companies, right? The Mag 7 type stocks, and everything that's kind of like underneath them, top 20, 30 biggest market caps that make the market go up or down, right? When are they all going to be reporting for the most part? Almost all of them are going to be reporting from, let's call it late July to about late August, right? Like that's going to be just a gauntlet of earnings. We're going to cover it all in the channels for you guys between the main channel and the reaction channel. It's going to be a gauntlet of earnings. Now, here's why I think the companies will be able to give a respectable guidance. They're going to have seen their July numbers already. Because remember, all these guys are going to likely be reporting between late July and let's call it August, late August, right? So they'll all seen their July numbers pretty much across the board. So that's already a month of the quarter they're already going to see. They also have just seen this past quarter with consumer confidence in the sewer, right? And even with all the tariff worries and all that stuff, they got to see those numbers. So I think if any company doesn't give a guidance, I think it's just a kind of a very weak move on their part. They should be able to give a guidance. They should be able to say with confidence, we think we're going to do roughly this range of revenue, this range of EPS, and this range of margin. There's no doubt in my mind. Like if you could go through these companies, all these big techs, from Tesla to AMD, Oracle, MU, Apple, Google, McDougal, CRM, NVIDIA, Adobe, Netflix, PayPal. None of these companies should not be able to give a decent range for their guidance. None of them. Because they all have seen their July numbers. Some of them will have even seen some of August numbers. And they just got to see last quarter with consumer confidence being so bad and with all the tariff worries. So at the end of the day, companies should be able to guide. So that's my opinion.
But the people wearing the rose-colored glasses are saying, I've heard the coulda, woulda, shoulda for months.
The rose-colored
and it hasn't happened.
It's something
so the glasses now for CEOs have gotten a little more clear than they were before. They were these big, thick ones before. They couldn't really see through the lenses very well. And now they feel like they've got a little more clarity. Heck,
I don't think any CEO feels
we got
they
more
have clarity.
guidance. I think they feel like they got a lot more today than they did 3 months ago.
Agreed. I'm on Scott's bandwagon here, 100%. Like that's the point I've been making here. I think, there's a little less fog than there was when these companies reported last year. A little less fog. There's still fog, but there's less fog.
They could barely give. Well, you're talking to, you're not talking to the biggest CEOs in America.
I'm talking some pretty big CEOs.
We're not going to get in a match about this type of CEOs. We're talking.
See, it's like a freaking horror movie with these guys all on the desk. It's like a horror movie, man. You're just waiting for when's it gonna go south? When's it gonna go south? Every time, it never fails. And this is still relatively peaceful, but you're just waiting, man. Somebody says the wrong little thing, and then
But I know for a fact that guidance last quarter was way better than people thought.
Way better.
Most people expected no guidance whatsoever. Mm-hmm. Now some gave two things of guidance just to cover themselves, but I feel like there's a lot more clarity today than there was 3 months ago. How can there not be? You can argue that?
I can. Where are tariffs?
Well, I mean,
you're a CEO. You're going to make $1 billion investment unless you're a semiconductor CEO and bringing it into the U.S. And that's going to be a long tail, right, to get those up and running. Do you have greater clarity in terms of what the tariffs will be, where your supply chain should be?
I feel like you have certainly much better clarity than you did.
Well, you don't want to be in China, but we saw some back. You
know what the rules of the road are with Vietnam, right? That covers a large swath of American business there. You figure something positive is going to come out of China because it has to for both parties. So the worst is off the table there.
Nobody's betting on China. Everybody's pulling their.
No, I think the worst has already been negotiated away.
The actions from this presidential administration show that they do not want the reciprocal tariffs that were put in place on April 2nd to go through. If they did want those levels, if that was their end goal, they would not have kicked the can down the road today and pushed it off to August 1st.
That's a fair point. That's a fair point.